All right. Welcome to the weekly meeting, March 4th, 2023, NFP week. It's all yours, Kim.
Okay. Okay, so today we're going to talk about, I was asked to talk about technical analysis and my entries and exits. So I'm going to play this video really quick. It's a 15-minute video. He kind of pretty much trades the way enters and exit or use the tools, entry methods, possibly entry methods that I use. So I wanted to play this really quick, and then I was going to go over a pair that we had this week and how I entered and exit out. So I'm going to play this really quick. Can you see when I make the video full screen, or no? Can y'all see that?
You haven't made it full screen.
But I'm saying when I do it, I thought somebody told me that they didn't see it full screen once before.
If you can master reading a stock chart, you will be able to make such better
Can you
trading
see it now?
decisions. I'm going to start off by teaching you how to identify
No,
trends,
it's not
how
full
to
screen.
find support and resistance,
Is it in full
and how to
screen?
predict the
No.
direction of the market
Oh, see.
based on
Okay.
chart patterns. Then we're going to move into more
You
complex
can't see it.
analysis,
Okay.
understanding market flow and advanced chart patterns. And then we'll look at some tricks that you can use to take your chart analysis to the next level. When it comes to trading, you have three different types of trends that the market can be in. You have a downwards trend, a sideways trend, and an uptrend. In a downtrend, the market swings will be making lower lows and lower highs as it stair steps down. And then in a sideways trend, the market will be making highs and lows that are roughly in the same area. And then in an upwards trend, it will just be doing the opposite of a downtrend. The highs will be continuously getting higher and the lows will be continuously getting higher as well. And what we can do with these swings is we can draw support, resistance, and trend lines to predict what the market will do in the future. When we see something like this double bottom right here, we can draw a support zone off of those two touches that allow us to see where the market will bounce in the future. And we can use that to take trades off of. And on the flip side, where the market makes a double high, you can make a resistance zone off of those two touches and then see where the market will find resistance and sell off in the future. This is the basics of how you want to read a chart and trade using technical analysis. And what you can do when it comes to trends, you can use what's called a trend line or a channel to help identify when the market is going to continuously bounce and where it's going to continuously bounce, or when that trend is potentially over and the market might shift into doing a different trend. The basic way to draw a trend line or channel is just use the extreme of the swing and then the next major swing or pullback in that trend. And then from there, you will be able to just extend that channel or trend line out, and it'll tell you a lot of information on the future of what the market is doing. And so from there, with that established, as the market comes back and touches the top of the trend line later in its cycle, you can take trades off of that. And so using just basic trend lines and support and resistance, we can use technical analysis to make a lot of really powerful assumptions about what the market can do in the future. Now, a more advanced way that channels can sometimes show up is something called a spike and channel. Sometimes in the market, you will have pretty big moves up in the market, and then the market will start to find a more consistent trend. And so what you can do is you can look for that channel after an initial move up in the market, because sometimes actually drawing a channel won't make sense off of that initial extreme, but when you actually draw it off of that spike and channel idea, it'll make a lot more sense. And you can actually, if it looks cleaner, you can draw the channel off of the highs You don't always have to draw it off of the lows or the highs, whatever works better. And here we can consistently see that the market is respecting this resistance level as it trends higher. And then it attempts to bounce off of the lows of this level, but inevitably fails. And once that happens, you can see there is a big trend shift. And so again, these are extremely important in identifying the trend. If you can just follow these, you'll be able to know what the trend is doing the majority of the time. Now let's look at a few key stock chart patterns. Now all these is a basic summary of what these certain movements in the market mean. And so if you can just understand the movement in general, you will be able to understand what every pattern means without having to study them. Now let's first look at a continuation pattern. This one is called a flag pattern. You have a bullish flag and a bearish flag. And the only difference is a bullish flag showing a potential that the market is going to continue higher, and the bear flag shows the potential that the market is going to continue lower. All it takes to see these patterns is a previous uptrend in a bear flag, followed by some consolidation. And then the idea is when the market breaks this consolidation area, making us that flag, is that the market is going to continue higher. And then the same thing for the bear flag is the market is coming down. It's sitting in a consolidation period. When the market breaks that flag, it's going to continue lower. Now, the reason why this works in terms of price action, if we look at a bear flag, is the market moves down, showing a lot of weakness, and then it starts to consolidate. And all consolidation is it's showing a balance between buyers and sellers. And the idea is, well, we're already in a downtrend, so the sellers are probably going to continue that momentum down once this balance in the market ends. And so a great live example of that is right here. The market has made a really big sell-off all of a sudden, and then it has gone into a consolidation. Now, there was a little bit of a pullback here from the lows, and that is totally okay. Again, the main idea is still in place. The market has shown a lot of weakness or momentum to the downside, and then it has just kind of started to sit here showing that balance. And then you can see once this consolidation area is broken, the market just takes off, continuing that downtrend lower. So let's look at another pattern that really shows you the basics of how powerful reading the market can be. This is a reversal pattern that shows you when the market is going to potentially reverse from a downtrend into an uptrend. And all this is called is a head and shoulders pattern. This is what we call a bullish head and shoulders pattern. If we flip it to what would be a bearish head and shoulders pattern, it can make a little more sense where the name comes from. We have the head in the middle and then these shoulders on the side. And all this pattern really shows you is when the market is switching from making lower lows and lower highs to making higher highs and higher lows. It's just showing you that basic inflection point of switching from a downtrend to an uptrend. And we can use this to see where the market is potentially going to reverse. To show you what this looks like on an actual example, here we have a downtrend with making lower lows and lower highs. And then it starts making an uptrend of higher highs and higher lows. And so down here, when we see this higher low put in, we can use that as an entry point into betting that the market is going to reverse. And to show you a little more advanced chart reading here is you can see that the market has a very strong sell-off here initially, and then it starts to peter out when it reverses. And this is one way to see that the market is starting to bottom. Just looking at the price movement in the market, it's very, very strong initially, just red bar after red bar. We have actually a bull flag here you can see, where once that flag was broken, the market continued lower. It didn't go that much farther, but it did continue lower for a while. So that was a good signal there. And then over time here, these pullbacks and bullish moves start to get more. And so you can see if you just kind of look at this in a big picture, it starts to make a rounded bottom shape. And so kind of just looking at it like this right here, you can see, okay, yeah, this downtrend is losing momentum. And that gives you a good reason to think it might start to end and we could start to either go up or go sideways. And so at a minimum, it shows you that the downtrend is starting to slow. Now, in terms of figuring out a target for this potential reversal off of this low area down here of this head and shoulders, the market can be very consistent with giving back an unhealthy move. This market moved very quickly down and it wasn't able to have healthy pullbacks, making it a healthy move. And so because of that, if the market reverses off of this head and shoulders, it's likely to give this whole move back up. The reason because of this is because there wasn't that much supply and demand on the way down, making this a healthy move. And so it doesn't take that much to move the market back up in this direction. And so you can see, if we actually see where the market kind of topped out here, it was pretty much exactly where the market started to sell off from. And now when it comes to understanding the flow of the market and what it could potentially do in the future, understanding and seeing that, hey, we had a big volatile move here, that means that the market has the potential for more volatility in the future. And so this can seem really simple, but this is really important when trying to predict what the market can do in the future. Because if you have a time in the market where the market is not showing clean volatility, you can see here, just the market's really back and forth, and there's a lot of just candlesticks on top of each other. And this, what this does is this is showing you that there is not that much movement in the market. And so what you want to do when you're analyzing the market is you want to look out for when the market's doing this and say, okay, hey, this is not a good area to trade. It's unlikely that I'm going to get good movement, and stay out of it, because the movement might not happen. And even if it does, it might not be that clean. Versus here, the market is a lot cleaner. The moves are a lot more directional. There are not many times where the market just has a ton of candles stacked on top of each other. It does in this little consolidation bear flag that we have right here. But because we had this volatility here, you can assume that the market still has that ability to continue that volatility. A really good rule of thumb that I like to use is the market repeats itself 80% of the time. And so
some people say the metaverse will only be virtual, but firefighters and
if the market is having volatility and in a good downtrend, it's probably going to stay in that downtrend and keep that volatility. Or if the market is in a really tight and sloppy trend, it's probably going to stay in that tight and sloppy trend. A big trick that you can do when it comes to finding support and resistance and looking at trends is looking at multiple time frames. If you're, let's say, trading on a 1-minute chart, it is really good to look at higher time frames like a 15-minute chart to understand the bigger picture, and you can draw your support, resistance, and trend lines off of this, because trend lines and support and resistance drawn off of a higher time frame are going to be stronger because the moves in the market are more significant. For example, if we look at the S&P 500 futures here, you can see here there are some key swing highs that the market has generated. And so off of these levels, you can draw a resistance zone that you can then keep track of as the market potentially swings up into it on a smaller time frame that you're actually trading, and then get in based on what you see on a smaller time frame. And so zooming into a 1-minute chart, we can see we have created a powerful resistance zone that the market is butting into. And because of that, we can look for a reversal and bet that the market is going to go lower. Now, with some of these patterns we have learned, what you can do, and the best way to trade, is couple all of these things together. We have a resistance zone, and now we want to look for something like a pattern. We want to look for a head and shoulders in the market to see that the market is starting to reverse, or a bear flag here as well, like we looked at earlier, to help show that the market is going to continue or start moving lower. And so this is a really great example of taking all these patterns and using them to help predict what the market is going to do. And so this head and shoulders right here is showing us a clean reversal. And then this bear flag shows us a continuation of that reversal. And from there, the market just starts to crater lower. And that movement is because we took this level off of a larger time frame. Going back to the 15-minute chart, because we have this larger resistance level, the market can have really big moves off of those because we're looking at larger, bigger picture trends in the market. So let me show you what this looks like in a real trade. What we're looking at here is the S&P 500 futures on a 1-minute chart. This is what I like to trade. And all I've done here is I have done exactly what we just talked about. There is a resistance level up here drawn off of a 15-minute chart. And then I have just watched the market on a 1-minute chart and looked for the market to make a very strong climactic move that was unhealthy. And then it started to slow down. It started to find some resistance up here. And then all of a sudden it started to make lower lows and lower highs. And so all I did was just use that understanding of being at a resistance area, it making lower lows that signifies a downtrend. And then I jumped in right here, betting that the market is going to go lower. And like what we talked about before, a good target for this would be down here, because this is where the market initially took off. And so if it's going to give that back up, well, that is a really good target to look for. And what this allows me to do is risk a smaller amount to get a higher reward. And so in trading, I don't have to be right very often when doing this. And this is very beneficial for being a profitable trader, because having to be right all the time or more often is very hard when it comes to trading. Now, if you want to go way more into the strategy, check out this video right here. I have gone into way more detail and discussion about my actual strategy that we just talked about.
Okay. Oops. Okay, so I wanted to go over technical analysis for UJ. Does somebody have a comment already? Now everybody knows that I like to look at the full view of what's going on with a pair before I enter in, and based off of UJ, and I'm going to go over pretty much the easy money strategy that was for this week. I think that was this week. Was it this week? Yeah. So looking at UJ, the market, the overall market structure is bullish, right? So we had first it was bearish, and then it came and pulled back. And then once it broke this zone here, it became bullish. So with that being said, so overall, the market flow or order flow is bullish. Okay. However, once we start zooming in, it's still bullish to me, but so I personally like to use trend lines.
Oh, sorry.
Better than your MAs now, sucker. Okay, so so price is still bullish. However, if we look here and we're still on the weekly, right? We had higher highs and higher lows. And then price came and broke this macro low. So once it breaks a macro low, and I'm not talking about these minor lows within that, right? Once we go down in time frame, this right here is the macro low. So once price started pulling back, my thought would have been that price would have pulled in here to continue to the upside, right? Because based off of market structure. But price pulled back and then broke this low. So now my thought process is to expect a pullback probably to this imbalance here to then continue to the downside. Let me put this right here. To possibly continue to the downside. I would probably take this one at least to right here based off. So once price pulled back up in here, possibly to this imbalance, the next move or trade would be down to here, which is price action. It's coming back to retest this area because it was almost there, didn't pull back. At least to retest this area based off price action and this trend line. So so if price does what I'm thinking it's going to do, that's where I would expect price to come back to. Okay. So with that being said, we had a weekly easy money strategy candle. So now I'm just now zoning in on using trend lines. Gag all you want. Gag all you want. So I'm gonna go down to the daily because I need a little more structure to refine my trend lines, right? So as of right now, and what I do is I just go from the swing lows, since this is bullish right now. I go from, make sure my trend lines touch all the swing lows. And if you're able to create a channel, I say you can create a channel, but right now this is not giving me what I need to be given right here. So wait a minute, let me go back to the weekly. And this was the candle right here. Okay. So based off of how we know how to trade, right? This was the weekly candle that Todd was looking for the easy money strategy on. Now this one did pull back. Did it pull back 100 pips yet? Yeah. So this one did pull back 124 pips. So if we had gone to the daily, that was here. Okay. So based off the daily and based off of price action, this is where I would have expected price to tap into specifically because this wick has already been tapped into and nothing, it did pull back here. But we're looking for pullback after this candle. So the next pullback would have been from this wick here. Price action for me are wicks. So I would have expected price to pull back. Let me just see if I can. So once price broke here, once price broke, you would expect price to tap into what I consider price action. This is a violated order block to pull back for your 100 pips. So it came back 79 and then went up and then came back. So that would have been 100 pips right there.
Sorry, Kim, can I ask a question?
Yes.
Okay, so you were saying a violated order block. What order block are you looking at that was violated?
So this order block right here, which was a bullish order block, right? So when price pulled back, you expect price to continue buying up. Right?
Okay.
Although price is selling right here, it gave a bullish order block. Some would say that it, and I should have done this first before I did this, but I'll go back to it. Some would say that it, because the wick broke through, that it violated the order block. I personally don't see it that way, but because I look for closed candles, that's just my that's just how what I look for when I'm trading. Because
Kim, I gotta challenge that, Kim.
okay, give me just a second. Let me finish my thought. Let me finish my thought right quick. And I say that because one, this was a downtrend, right? This was a downtrend, and this is how I use my trend line. And I'm gonna just take it from this touch and this touch. This hadn't even, we're gonna pretend like this hadn't even happened yet. Okay. Sorry, can you
You say that I'm gonna be 41 this month.
Okay, let me see. Okay, go ahead, Kim.
okay. Okay, so this was in a downtrend, right? Started breaking structure levels to the downside. So I had a touch here, pull back, a break of structure here, pull back, and then where's my, here we go. So because of my trend line, I'm expecting price to pull back somewhere to this trend line and continue moving to the downside. So we had this order block here, and because I'm moving down, I'm expecting sales. That's just my thought process. So let me go back. So because we're moving down, I'm expecting sales, and I'm expecting a sell at least to these lows right here. That's my, that would be my current target. So now that I have a pullback near the trend line, I'm expecting you can put your entry here, or you can put your entry, if I go down, let's go down to the 4-hour. Okay, so now I can refine my entry just a little bit. So I would put that order block. You can either, that's a lot of pips right there, but that's 100 pips. That's a lot for me as well. I wouldn't not have done UJ. I don't trade UJ, so I don't know what the typical pips would be. I know for GJ 20 is 20 pips for me. So once I come in here and I see there's imbalance, I would expect this imbalance to be filled. So now I'm narrowing down my pip count, my stop loss pip count, right? So I'm gonna just put it right here for now. And that's just above this high over here. Okay, so now I'm gonna go back to the daily just so we can move it a little faster. So now when price comes up to my order block, for me, it's not a violated order block because of the wick. I'm still expecting price to go down to sell because we're in a sell trend. Now, if price breaks through here, then I'm expecting a pullback to go up to either fill this imbalance or come to this area of supply and then drop some more, possibly.
Right. Okay. Can you drop down like to the 4-hour again?
To the 4-hour.
I want to see this. I want to point something out. What about the 1-hour?
The 1-hour.
Okay, so let me see the 15-minute.
15. What you looking for?
Well, I'm just trying. All this is a liquidity grab, right? If you look back at that daily, you have equal highs right there with those 2 wicks. Highs. So you see
So
the
it came and
liquidity
grabbed
grab.
it.
Yeah, you see the liquidity grab right there. If you stretch that out, there's really 3 relative equal highs that have been created over the last week of trading, right? Like that area right there is a liquidity zone.
Yep. True.
You see you wick past anytime you wick past relative equal highs, hopefully everybody in this chat understands what's going to happen. If it's just a wick, trust me, it's going the direction that it wicked away from. So in this case, once you saw the wick, it should have been a telltale sign that they just grabbed the liquidity. It doesn't matter, smart money, dumb money, however you want to look at it. If you recognize where the liquidity is on your chart, you'll eventually find yourself on the right side of it, because all it's going to take is once or twice for you to get liquidated. Then you'll start paying closer attention.
When you say wicked, so it wicked these equal highs, so that means it's going to go away from there and continue going down,
right?
Or
you have to ask yourself, why did that wick need to go? That's a 4-hour order. It's a daily order block, right? It's a daily order block. Why do they need to run that order block? Why would price have to go above it? There's absolutely no reason to go above it. The only reason the price has to go above it is because people have their orders placed right there. Everybody's stop loss is sitting right there. It's a strong daily order block, right?
Right.
They know that. They can see it on the computer. So they're just gonna take all that money right there and run the other way.
Okay.
So yes, yes, because of that liquidity, that's definitely why I feel price pulled back. And this is why I like using the trend lines. I can turn on the MAs. It's probably going to show the same thing. Because this is a daily order block, and a daily order block, most people would think, oh, price is about to buy up. You would look at it as it did not break this low.
Mhm.
It gave a daily order block. Price is about to break up, to buy up. But if you're not looking at where you are in the grand scheme of things, meaning the order flow is currently bearish, then that's when you would get, that's why I said, when I'm looking for sell, when I'm selling, when it's bearish, I'm looking for sales. Now, I know how to trade a good old pullback, okay? But it's got to meet certain requirements for me. And this did not meet any requirement for me to start buying. It would have to have broken this level right here before I started buying.
Hey Kim, how many
Yes.
pips? How many pips is that green candle, that daily candle?
291 pips.
Kim, we selling that anyway.
But you shouldn't be selling it to sell it to a 50%. That's would this be an easy money strategy? That candle, because of the pullback, I don't know.
Well, listen, this
Well,
is,
we're selling it. Well, I'm selling it because market is selling. The order.
let me I hear you, and I don't have a problem with anything you're saying. What I say is, if your target is 50% and it's 100 pips, pick your 100 pips. You know,
No,
like,
I agree. I
whatever
agree.
whatever level of trader you are, a 50% pullback win at 100 pips is a win. You know, if you try to get greedy and get the 200 pips and it doesn't go 200 pips, you're going to feel pretty bad afterwards. So, you know, I think the more advanced that you get, you try to take advantage of the entire move. But if you know you're a beginner, man, just get what you came to get and close the trade, because all those pullbacks, and I mean, the market makers, the algorithm that they put in, it's designed to get you out of trades. You know, they'll pull back, they'll scare you, they'll do all sorts of things to play against your psyche. And most people don't have sense enough to close the chart once they enter the trade. Close your app. Don't look at it. Once you analyze and you enter the trade, you have a stop loss, you have a take profit. Stop looking at it, because when you look at it, it's going to make you do things that are not in your character, you know. So you start messing up. So if you have a take profit of 100 pips, let it hit your take profit.
That's true. That is true.
I'm sorry.
Is that looking at last week's daily order block, or is that right now?
No, this, I replayed this right here. This is
Okay,
a
cool.
replay.
I
Yeah.
was about to say that's the trade all over again.
No, this is a replay. So with that being said, yes, if you see that you're in a, even if this was an uptrend and you saw this candle, you saw this candle. I want to be specific when I say this. You saw this candle, you see it's in a daily bearish order block. By all means, yes, go on and trade a pullback to your 100 pips. But because I'm in a downtrend, I'm in a bearish trend right now since October. of last year. It's been bearish. In a bearish trend, I'm expecting a continuation. This right here, there was a break of structure here. Let me just move this here. There was a break of structure here. I'm expecting a pullback to retest this area. Okay, so this is where my entry I would expect my entry to be. Once this pulled back to my entry, now me personally, I probably would have just put in a entry. You know, I would have put a limit in and then let it play out. But if you're not comfortable with doing that, it pulled back to retest your area, right? Gave you a bearish order block. So now you can feel more comfortable trading, putting in your trade. And like I said, we're on the daily. So you want to refine your entry to something that's more manageable. If you are okay with 100 pip stop loss, then you could have made this 100 pip stop loss and been good. Okay. But as Todd mentioned, no, if you saw the liquidity, if you were able to spot the liquidity, you could have put your entry even closer. And that's a 64 pip stop loss. So if you wanted to just round that up and do a 70 pip stop loss, then now you're at 70 pips. Because you know it's coming to grab liquidity and possibly continue to the downside. Okay. So with that being said, I'm going to finish the replay. And there the target would have been here. 436 pips. With the 70 pip stop loss for 6%.
Why would that have been your target, Kim?
2, 3, because this was the last low.
Does everybody understand it? I think that's crucial. Does everybody understand why she got the target?
Yes.
And this,
Yes.
I just want to cut in and say that this is important for whatever time frame you are trading, right? So because her setup is on the daily, she's targeting the equal lows on the day or the last low on the daily. Now, this doesn't mean she can't drop down and take the trade from a lower time frame, but her target is based off where she found her setup, the low on that chart. That's very important when you're trying to, I guess, establish where you're trying to take the trade.
Mm-hmm. Now, as you can see, it went to where my initial target was, right? Let me play it out. Let me play it out. But you definitely want to target. So this was the last low before the pullback. So you can target this low. One, it's a bullish order block. So price could have easily just come into this zone right here. Price could have easily just come into this zone and started buying up. It could have bought up, played in here, broke my trend line, right? For one, because it did tap into this area. Oh, no, it didn't. It didn't get it. Okay, so no, I was going to say it tapped into this area of demand right here, but it did not. It just sat on top and then started pulling back to the top side. So with that being said, let me delete delete this. Price broke through. So now I'm just bringing my trend line down a little further. Okay, so now my next expectation for a pullback is here. Either here, this violated order block, or this violated order block. Boom, boom. This violated order block or this violated order block. So with that being said, let me play it out. So once it got there and it gave me, yes.
Can you also put the fib on?
Oh, yes. Yes.
Well, only reason I say that is because just to show people that the tools work too, you know?
Yes, I was supposed to include that in this today. Yes. So price pulled back to the 50%.
Or the order block that you were, or that order block that you were referring to, right?
Yes. And then gave a bearish order block. So now if you want to put in and I did want to, I should have done it up here, but wait a minute, hold on, because I do want to make it very clear. I do want to make it clear how exactly what I do. For instance, this here. So this pulled back to the 50%, right? Pulled back to my trend line. It came back and retested my zone that I was expecting it to retest. So although I did do this, I mean, because it's just basic trading 101, and I did this low, the target for me would have been the negative 27. That would have been a target for me. So with a 70 pip stop loss, my target to the negative 27, that would have been a 9% trade. And that was all from this down move, to pull back to my 50%, and then trade to the negative 27. That's it. That's all. So now that trade is played out, I'm removing, and here's the next trade. So we have from here to here, it has pulled back to the 50%. If you want to trade, that's 199 pips. Again, you can refine your trade. You can refine the trade. I would expect this to come back a little more, a little bit more. There are no wicks on here. So I would definitely expect this to come back a little more, but I don't know how this is going to play out. So I would definitely go down in time frame to refine this trade. But where's our target now? Now my real target was, this was the real target right here. So you can either, since price is bearish, this was the main macro swing low. You can either target this low again, this next low, as we did before when we targeted this low, or you can shoot for the negative 27. It's up to you. That low here is 371 pips. And depending on what your stop loss was, you're looking at least from 2 to 3, maybe 4%. So I'm going to finish playing this out. Okay. So now this pulled back into your order block. This came to the low, pulled back into your order block, and then sold down to your negative 27. All right, so another trade in the book.
Hold on. Can we see how many days that took to do that?
From this pullback or from this move here?
The last one.
So so we're waiting for the pullback. So you set a limit. So we're talking, so once this order block completed, you're talking 7 days. Well,
Yeah, we know y'all ain't held no trade for 7 days. That ain't gonna happen. Hey, I get like 1,000 DMs if the trade lasts over a day. Hey, I know y'all ain't held no trade for no 7 days. Oh.
7 days, 7 days before it started moving. Now, if you couldn't wait for 7 days, if you got in this trade, because it never came back, right? It never came back after this until 1, 2, 3, 4, 5 days later. Say if you got into it 5 days later, then it only took you 2 days. Well, let me take that back. It only took 1, 2, 3, 4, 5, 6. Yeah, 7. Still took 7 days.
Okay.
It took 7 days to tap you in, but then it took 7 more. So it technically it took about 14 days.
Okay. Thank you.
You're welcome. So with that being said, that would have been another trade entry. And then we're just going to play it out. Again, I'm going to start. So now that it has broken this low, the next target is this low. Okay. So we're going to play that out. I'm going to extend my trend line. And now that we've gotten some more data here, I'm just going to use that swing high. And I'm going to take it to my target area right here. So now what am I expecting? I am expecting a pullback. This is a violated order block right here. So I'm expecting price to pull back here and then continue back down to the downside. That's just my expectation. I don't know what price is going to do, but that is my expectation. And as you see, price pulled back. My expectation was for it to come to this low. So this was my trade. This would have been my trade idea. Come to this low. Price tapped into my entry and then pulled back, but never came to my low. Right? So let's see how it plays out. Now, for me, once price breaks my trend line, I'm not looking for buys at that point, but I will be looking for buys if it breaks my high, if it breaks this last swing high. So if price comes and breaks through this zone right here, then now I'm expecting buys. So it did break this high. So you could, so once price pulled back, we're expecting it to go down. It didn't go down. It pulled back, broke my trend line with momentum. This candle was 284 pips. It broke my trend line with momentum, broke past this high right here. This is just a high, not a swing high. So once it broke the high, you could have easily gotten in at the pullback. This line is my low. So a lot of times these lines are respected. So it's pulling back. Let's see, let me go day by day. It's rejecting the zone, pulling back to this break, respecting the zone. And now it looked like it's about to take off. So now we have a order block right here. It's either going to sell or it's going to keep going. So it violated that order block. It is in my new high right here, the high where my trend line is. There's an order block there. So if it breaks there, now I should be looking for, that's what I do. I look for buys. Some people will just start buying from here,
Yeah, because
Just-
you 3 weeks late.
but I don't care.
Which one with that?
Well, no. Let me not say that, because on a smaller time frame, the swing high would have been different, right?
But go back to the daily. I want to see or point out something. See how it broke the high, and then you can throw, and when it started to pull back, you can throw the fib on it and get that pullback.
I agree, but I personally would not have been looking for
Okay.
a break of structure until, I mean, I would not have been looking for buys until it started breaking my highs, my swing highs.
Okay.
Yeah, I could have gotten in at the break of this right here, this high, but this could have easily come here into the supply zone and started selling again, right?
But it did go in there and start selling. That's what I mean. But when it started selling there, you can throw the fib on it from where it came from, right?
True. I got you.
And then it pulled right back to the 61, which is right where you needed it to pull back.
Do-
We making money.
Well, I'm glad you're making money. Okay. Okay. So yes, with that being said, you could have definitely, once this started creating higher highs, and this would have been a higher lows, sorry. Once it started creating higher lows, because as you see right here, it was creating higher lows, but it was also creating lower highs. So for me, and I can see where, once it broke this high, because it was creating lower highs and price came and broke these lower highs. Yeah, I can see where Todd is saying, okay, that's when you should get in. So you fib this move, this big significant move up. As it's pulling back, you draw your fib. It pulled back to the 61, which I would have definitely said there's a violated order block here. Okay.
On your
And
daily, I think it's an imbalance. It shows as an imbalance too.
let's see. Yeah, there's some imbalance. So that was 50% of this imbalance, right? It pulled back to 50% of this imbalance. But on the lower time, on the 4 hour, it pulled back to what I would be looking for, a violated order block and this to close this imbalance. That probably would have been my entry if I had traded it. So because it's because this imbalance is close to this order block, and then after I had drawn my trend line for this touch and this touch, and it was so close to my trend line, my entry would have been this closed imbalance right here. So with that being said,
Hey, Kim,
yes.
what is your main time frame that you take your trades off of?
30 minute, 15, 30, 15 minute, 15, 30 minute.
Okay, so your setups are happening pretty often then, I guess?
Well, if I see something on the higher time frame, I have to see it on the higher time frame first. And then
So how long does that take? How long does that take to see your setup on the higher time frame?
It may take some time. I don't look to trade. I don't look to trade every day. Like I know I'm not always going to be in a trade every day. Okay. Yeah, I'm not looking to trade every day. I mean, if I can get a trade in every day, but if I can get in a trade, if I can get in like a trade like this, and I have a what is this? 34 pip stop loss. Once my trade is in the blue and I'm not seeing it in any red, then I can stay in the trade. But once it starts just sitting in the red, I can't do it. I can't do it. Okay. So with that being said, this pulled back to the negative 61, right? So the target, which was, this was a 45 pip stop loss. Or let me rephrase that. So this would have been here. And like I said, I don't trade UJ, so I don't know what the average stop loss is for UJ. So I'm just I would have put 50 pips maybe, just because I'm expecting it to fill this imbalance. And although it came past here, that probably would have been my zone for a stop loss, or I definitely would have rounded it off. So if I put this below here, I would have definitely rounded it off to 40, maybe 45 pips. So with that being said, the target could have been either these highs right here for 264 pips with a 6%, or the target of negative 27 for 396 pip and 9%. And with these highs right here, this high, this high, this high, this would have been my trend line. So I definitely would have targeted the negative 27 because I'm expecting it to tap my trend line. Okay, once it gets to this trend line, my confluence here is that I'm looking for a sell is that there is now an order block over here. Let me take out all this stuff. There's now an order block over here that I'm looking for price to come into, possibly tap this trend line. And the trend line may even change because now this This was an area that pulled back. This was an area that pulled back. So I would probably change my trend line to reflect this here. Okay. So these highs here, this high here, right here. So now I'm expecting price to tap here and then start pulling back. Price is still bullish, but I would be more inclined to get into a sell for a pullback to then continue, for then to have price pull back to this trend line somewhere, or this break of structure, to then start buying up some more. Does that make sense?
Yes.
So now once price pulls back, so now my new area is from here to here, wherever price starts pulling back. That's where you'll mark up. So wherever price starts pulling back, now I'm expecting it to come to at least my 50% to continue buying up to my negative 27, which is confluence with price action here. And then once it gets here, I'm expecting a some type of pullback. So then I will mark up my next swing high, whatever that may be. Oh, wait a minute, I forgot I'm in replay. Hold on. Okay. Okay, so price pulled back. However, it is breaking my well, I'm not gonna say it's breaking. So it's in this zone here. It has swept this high. So let me just play it out. It's still respecting the trend line, as you can see. And it's still going. So it never pulled back. So now I just move my trend line per. This is my high. This is now my high. So maybe price will pull back into here. Now, granted, let me just say this. So this line right here, this trend line right here is like a secondary trend line. This is the main trend line right here. So price can easily come break through here, pull back, and then trade all the way back down to here. So I'm just going to finish playing it out. And all I'm doing is waiting for, okay, so there we go. That's the end of last week. So I want price to pull back to, so we had this here. Let me move. So it's price. So now my price range is up to here. I want price to pull back either here, because there's a violated order block here. It's close to my trend line, and continue buying up, or I really would like for price to pull back to my 618 or even my 78 to continue buying up. Let me see something real quick, because this might have just been a continuation of.
Good luck wishing. And
You
it ain't gonna pull back to your 78, girl. That thing.
don't know. You don't know.
I, I would I would bet a large sum of cash that it's gonna roll up. It's just going up.
Oh, I am guaranteeing you that this move right here is probably gonna go to, oh, wait a minute, hold on. I'm doing it the wrong way. I will put my money on it that this move is probably coming up to here to then pull back
Where's that?
to
What price is that? 110.42.
142, 110,
Oh, I mean, yeah, 142.
142.56, maybe even higher, 145, 145, 300 something.
143.53 maybe. 143.53.
143.
It needs to go to 143.53. That's the bottom of the monthly order block. That's where it needs to go.
The bottom of the monthly, hold on. The bottom of the monthly order block.
And that's about your 78.6 if you fib it from the top to the bottom.
The bottom of the monthly order. You're talking about this?
You see if you fib from the top, because the move came down, right?
Mm-hmm.
Those red candles came all the way down, and now it's coming back.
Right.
So it needs to pull back, by my calculations, to the 143.53.
143.50 something. Okay. Uh-huh.
Yeah. So that's where I have price going, at least to that spot.
Okay. And I would say at least to 145, 173.
I'm on board with that. I mean, yeah, I'm just saying off of, I think I did mine off of a 2-month chart. Anyway, but that'll put us in the ballpark. But this is, I mean, I made this calculation. I want to say we did it in December.
Oh, I wasn't a trader back then. Just kidding. So yeah, I would probably say this because of one, this wick right here, two, the last up move before the last up move before the down move, right?
Yeah, I'm tracking. As long as you buy it, it's flying. When you start selling, though, you start
So-
selling, you might be in a little complications there.
I agree. So I'm definitely biased for this buy here. One, it broke my last swing high, but we're on a weekly right here. But I'm definitely biased for a buy up to this zone.
Yeah, so this is a good time to point out the rally-based rally, from the market structure.
Mm-hmm.
If we understand that this is buying on this weekly time frame, you got a rally. Last week was more than likely your base, which
Rally,
is that little red.
base.
And
And then a
you
rally.
should expect another rally coming.
Mm-hmm.
So even if price started from right where it is right now, what's 100 pips back from where it closed?
100 pips from where it closed. You're saying 100 pips pullback to the downside?
Yeah, to the downside. I can't see it going 100 pips down from where it is right now, is what I'm saying. So
I don't see it going 100 pips, but I do see, let me see, all these darn lines are driving me crazy. I do see it coming back maybe from price where it is now, 56 pips
Okay, I mean, I don't have a problem with 56 pips.
to close that imbalance.
Yeah, I would like to see it close. I mean, you got a bearish order block on the 4 hour. It can go 62 pips,
Mm-hmm.
but there is an order block about 100 pips down from where it is now.
Yep, right here.
Yeah,
But yeah, but this, okay, so yeah, that was the zone from where price is now. We're saying 50, that's the violated order block. Well, that one's already been tapped into. But that's 100 pips.
well, yeah, but what I'm saying is if I'm trading UJ, me personally, I'm selling it until it buys, whether it's 60 pips, you know, and then it
Okay.
buys, or I would just wait for it to buy, you know, because the dollar is definitely buying next week.
Mm-hmm.
You look at
Okay.
everything, even those indices. I mean, they're set up for the big drop, you know. And
Sure.
no matter how you come to your positioning, you know, on the chart, whether you use order blocks, you use trend lines, or whatever, you know, like if you're waiting for that to sell down to your bottom trend line, it's going to be about 100 pip sell. Right?
Mm-hmm.
And if you're waiting, it's in the middle, so you don't have to do anything. You don't have to take the trade from here. You know, I think it's clear that it's going to sell further. So
Mhm.
if you're trading just UJ, if that's the only pair that you have to trade, then you're either going to wait for it to buy, you know, or you're going to sell it from this point down to wherever you think it's selling. You know, to me, there's caution in both. So for me, I would have to sell it first until it starts buying. But I just don't like that it's not 100 pips, you know, like it's not guaranteed that it's going to sell down to that order block. So I just wouldn't bother with the trade. But if you're a shorter term trader, you know, if 60 pips is good, then I think it's definitely available from where it is right now. So, you know, everybody has to understand who they are and what they're looking for as a trader. Everybody is not going to be a swing trader. I respect that. Everybody's not going to trade smart money concepts. I respect that. But however you trade, you have to be true to your style. You know, if you're looking for support and resistance and trend lines, you know, people get paid by doing that too. But just make sure that you're using your entry techniques and you're trading it to your take profit. So if you're taking this trade off this 4 hour setup, then you have to take profit right there where Kim has that line going across. You can't wait 100 pips. That your take profit is right there because it's set up. This setup is based on this 4 hour chart, and anything beyond that point is hopium, and hopium will get you screwed up. So I think that's where people need to stay in their wheelhouse, whatever style of trading you're doing. If you're just looking for 50 pips, if you're looking for 10 pips, you know, however you're doing it, you know, if you stay within that set of rules, then you're good. If you're looking for 100 pips, this is not your trade.
Mm-hmm. Because price is bullish, so you want to, because this can, and that's why I say, me personally, I don't normally like to trade a pullback because you never know how far it's going to go back. But
Sure.
once it gets to your zone and you're trading the trend, you can almost guarantee that you're going to get a good payout. So if it does pull back to this order block, you can best believe that it's going to keep buying up to at least this high over here, at least to that high, which is 329 pips.
That ain't no hopium right there. That's the real deal.
All right, y'all. Let's get to these pairs for the week.
Yes, so Any other question? Oh, wait a minute. I see something. Hopium. That's a new word we need to put on the bingo chart. Hopium. Todd's bingo chart.
Check.
Any other questions? That would be a no.
Yes, I do, sorry.
Oh, okay.
May I see your fib numbers? Mine look so different from yours, your fib settings.
Numbers.
Yes.
Let's see. So I just have the 188, 78, 618, 50%, the -27 and the -61. I know some people use, I don't know, is it 32 or
38.2.
something like that? Yeah, that.
So how does the settings look when I go in to set it up?
Oh, my bad. There you go.
Got it. Thank you.
You're welcome. Okay. Any other questions? That's it? That's all? Oh, Alicia not on here. I forgot she's.
Great job, Kim.
Thank you.
Gracias.
Gracias.
Yes, thank you.
Thank you.
Welcome.